Hello everyone and welcome to another informational video for the Closed-End Fund Mastery Super Screener and Interactive Report. This particular video is a follow-up to the first video I did about a week and a half ago about what happens to a fund after it loses its Closed-End Fund Mastery qualifying status. And in that video I showed you numerous examples of a fund's distribution increases while a closed-end fund mastery qualifying fund, as well as the many distribution cuts that were avoided because the funds had lost their closed-end fund mastery qualifying status. I wasn't planning on doing this video, but when you think about it, it's kind of a natural extension of the first video. So today in this video, we are going to look at the fund performance after the loss of a closed-end fund mastery qualifying status and the performance impact after the declaration of the distribution cut. But before we get into that, for those of you not familiar with closed-end fund mastery focuses on three main goals: distribution sustainability, long-term appreciation potential, and being well positioned for future distribution increases and special distributions. Now, with my little introduction out of the way, let's get on to the gist of the video. First, I would like to give a special thanks to my friend and first ever subscriber, Tom, for giving me the idea for making this video. And secondly, I need to preface what you're about to see are actual returns of closed-end fund mastery qualifying funds that have cut their distributions after losing their qualifying fund status. This is in no way an indicator of future fund performance. Okay, now I know I'm presenting a lot of data to you at one time. It could be a little overwhelming for the eyes to look at, but I promise you we're going to get through this as quickly and painlessly as possible. What we are currently looking at is the fund performance and distribution performance of every closed-end fund mastery qualifying fund after it has lost its closed-end fund mastery qualifying status. Below on the horizontal axis, you can see the ticker symbols for every one of these funds. And to real quickly walk you through how this chart works, we're going to look at the ticker symbol MQY as an example. Here you can see the fund cut its distribution by 13.59%. From the time that fund lost its closed-end fund mastery qualifying status to the time of the distribution cut, the share price had declined by 30.98%. The super interesting thing is that on the day that they declared a distribution cut of 13.59%, the share price only declined 0.88%. Now what you're looking at is a representation of a similar situation for every single one of these funds, with a few exceptions. For example, the fund FEO cut its distribution by 28.57%. By the time that distribution was cut, the fund had already lost 23.62% of its share price after it lost its closed-end fund mastery qualifying status. Now here, the share price change percentage shows 0, because the truth is I don't know what the decline was, because this fund has since been delisted. If we go over here to the fund CGO, after CGO lost its closed-end fund status, the share price declined 40.27% on the day they announced their 20% distribution cut, and the share price on declaration day only fell 0.82, or actually gained 0.82%. And as you can see, in most cases, this is the situation time after time after time. But the most significant thing that this chart points out is that the biggest loss of a fund's share price didn't happen on declaration day when they announced their distribution cut. It was from the time it lost its closed-end fund status to the time it declared its distribution cut. In other words, the time to get out of these funds were when it lost its closed-end fund mastery qualifying status, not the day they cut their distribution. After putting my research material together for this video, I have to tell you I was quite surprised at the insignificant share price movement at the day of the declaration of these distribution cuts. You can see there's pretty much a flat line all the way across the board. The biggest cuts in the share price on declaration day were 2.74% for the fund USA and 3.34% for the fund ETV, which is an Eaton Vance fund. Okay, so now that we've discussed the insignificance of the fund share price movement on declaration day, I'm just going to go ahead and ease the burden on your eyes by getting rid of those numbers. Now, another notable exception is that not every single fund declined in share price after it lost its closed-end fund mastery qualifying status. For example, here you have the fund ETG, which gained in share price by 1.47%, ETY 3.95%, another fund 1.67%, 2.78%, 1.25%. While all those funds appreciated in share price, look at the size of their distribution cuts. 23%, 13%, 4, that's not bad, 6, that's not bad, almost 9% over here. So what seems more appealing to you? A 1.47% appreciation in share price or losing 23% of your distribution? Seems like a no-brainer to me. Another two funds that appreciated in share price were the funds ASG and the fund USA. ASG appreciated by 18.5%, but they cut their distribution by 15.2%. And similarly, having a matching distribution cut to the appreciation in share price of 8.44% to a loss of 8.68% in their distribution. These two funds are managed distribution funds, and if you watched my last video or if you subscribe to my newsletter, I go into great detail about the predictability of these managed distribution funds. And now finally, one more notable exception are a couple funds that actually increased their distributions after they lost their closed-end fund mastery status. In these two cases, the distribution increased and the share price decreased. Now, in the case of IFN, another managed distribution fund, the change in both is not that significant, more or less insignificant. But let's say in the case of the fund over here, TSI, where the fund increased its distribution by 9.09%. Well, since it lost its closed-end fund mastery qualifying status, the share price actually declined by 17.74%. Now, if the fund TSI happened to have a soft spot in your heart, despite no longer being a closed-end fund mastery qualifying fund, avoiding a 17.74% drop in share price, and then have the fund increase its distribution by 9%, getting back into that fund would greatly increase your yield on cost. In other words, you would be getting a much lower share price for a much greater yield on your previous initial investment. I mean, if someone was into TSI that much, that would seem like an amazing buying opportunity to me. But that's just my opinion. Okay, to close out this video, to summarize, of all the funds that lost their closed-end fund mastery qualifying status, there was a market average decline in share price of 10.29%, day of declaration average decline of only 0.34%, 7 market share price increases with an average of 5.44%, which is greatly exaggerated due to the 18.5% share price increase from ASG and the nearly 8.5% increase from USA. Market decliners, there were 36 for an average net loss of 13.64% in share price. Okay, that's a wrap for this video. I hope you found it useful. Please give it a like. If you're not currently a subscriber to the YouTube channel, click subscribe. If you would like to learn more about closed-end fund mastery, there are links to videos in the description below, as well as a free trial offer to the Closed-End Fund Mastery Super Screener and Interactive Report. Thanks for watching.